So here, this is about payroll accounting, and every company that has employees working for them have to worry about payroll accounting or deal with payroll accounting. And when it comes to payroll accounting, companies have to withhold taxes, federal taxes and state income taxes if that's required from employees' paychecks. Now, the type of taxes that are withheld from employees' paychecks are FICA taxes. FICA stands for Federal Insurance Contributions Act, and that includes Social Security taxes and Medicare taxes. So, you probably have seen in your pay stub, if you work for a company, that Social Security and Medicare taxes are being taken out from your gross earnings. And usually for Social Security taxes, as of right now, so as of 2024, as I record this video, 6.2% of the first $137,700 of the employee's salary or wage for the year is taken out of their gross earnings. Then you have Medicare taxes. That's your medical benefits. So 1.45% of your salary or your gross earnings is going to go towards Medicare taxes. Then if you make a lot of money, you will be assessed an additional Medicare tax of 0.9%. So those are for the people that are earning $200,000 or more in a year. So then that's just FICA taxes, Social Security taxes, and Medicare. Now you have your employee income tax. That includes federal and also state. So federal income taxes, that's something that we all are imposed. That's all imposed on us. When it comes to state income tax, some states do not have state income tax. Some states do. But either way, employee income tax includes federal and state income tax. So that's another set of taxes that are withheld from your gross earnings. Then you have any voluntary deductions like a retirement plan, like a 401k plan, any pension, union dues, any medical or dental, vision, insurance, all of that, that's voluntary. So that's not required. That's something that you have to sign up for, and that's something that is strictly voluntary. Now, when it comes to just payroll in general, the example that I like to use is the example of where you have a job and you perform your task for the first 2 weeks. Those first 2 weeks, you haven't received cash payment yet, and you probably won't receive it until the third week for those 2 weeks of work that you perform. But what the company has to do is accrue the salary and wage expense in their books for those first 2 weeks of work that you've performed to them. So during that time, that's when they're taking into consideration the FICA taxes that's going to be withheld from your earnings, and also your federal and state income tax and any kind of voluntary deductions that you have that's also going to be taken out of your gross earnings. So they're going to have to take that into consideration. So if I scroll down here, let me scroll up just a little bit if I can. There we go. This is an example here of when a company records employee payroll. So I just made up these numbers here, and as you can see here, we can just assume that this salary here of $5,000 is for the first 2 weeks of someone working. And so we see here the company has to accrue the expense in their books. In this case, you see that salaries expenses debited for $5,000. And this shows the gross pay. This is the gross pay, which excludes any deductions or anything that's applied or taken away from this amount. This is just a gross amount. Now, all of these accounts that are credited are the amounts that are taken out from this gross amount here of $5,000. So it includes FICA taxes, which are your Social Security and Medicare taxes of 6.2% and 1.45% respectively, of $310, which is 6.2% of $5,000, and then $73, which is 1.45% of $5,000. Then you have employee federal income taxes payable, which is also taken out of your gross pay of $1,100. employee medical insurance payable of 50, employee 401k plan payable, that's 100. So now we're getting down to these voluntary contributions here. So I'm going to go ahead and bold this, letting you know that these are voluntary deductions. Okay. 401k plan, so retirement plan, union dues, $120. So I just made up these amounts here. And so once this is all taken into consideration, again, these are all going to be a subtraction to your gross pay. Then the account that's going to be credited is your salaries payable. This amount here is the net pay that you are actually going to receive in cash. And you can see here on the right hand side, this is the net pay, and it's taking the $5,000 gross pay, subtracting out $1,753, so $1,753, which is your payroll deductions. This is all of the items here. That's $1,753, and that's going to give you your net pay. Your net pay is what you're actually taking home. So this is again to record the accrued payroll for December for a company. So the company has to make a cash payment to you for $32.48. So on January 1st, I just made up a date here. Pretty much it's going to be the day after the entry that was accrued, right? So the entry that was accrued was on December 31st. I just used the date after that because that's the cash payment is going to be made after the accrual is recorded. So once the cash payment is made, that's when salaries payable is going to be debited for $32.48 to eliminate this initial payable that was accrued on December 31st. Cash is going to be credited for $32.48, recognizing that the cash payment did go out to the employee. Now, the company has to do something on their end as well. So the company has employer payroll deductions. So they have FICA too as well. So they're going to have to pay the other half of the FICA taxes of 6.2% for Social Security and 1.45% of Medicare taxes. So they have to they're responsible for that too as well, along with unemployment taxes. So companies have to contribute to the unemployment bucket. Okay, so they're going to have to contribute to federal unemployment taxes and also state unemployment taxes. So employers are responsible for contributing to the unemployment bucket, not the employees. And you can see the rates here, the percentage and how it's applied. So we scroll down here. This is an example of recording employer payroll taxes. So this is what the employer has to do. So we see here that FICA taxes of 6.2% and 1.45% from Social Security and Medicare, respectively, is taken into consideration. So you see here it's the same amount, $310.73, just like what is shown here for the employee. So the employer has to pay the other half. Then it's followed by the state and federal unemployment taxes that needs to be contributed by the employer. And as you can see here for state unemployment, 5.4% of the salary of $5,000 gives you $270. Federal unemployment is 1.6% multiplied by $5,000, that gives you $30. So when you add all of the items up in the credit column, that's going to give you $683, which is going to be debited to payroll expense. So, and this is to record employer payroll taxes.